We are at 21K right now, and we have just hit the 200-week moving average here. This is Bitcoin over the very long term, and the 200-week moving average has been a very, very nice support in past crashes, right? After the Mt. Gox crash, after the 2018 final capitulation, during the Corona crash, now we are again very, very close. We have just crossed below this 200-week moving average. Now, every day I do a market update for the premium members. The premium membership is at thebitcoinstrategy.com, but since everything is going down right now that much, I just decided to share today's update free here on YouTube. So let's be strong and hope you enjoy the video. Let's have a look at the macro picture again. I think it makes more sense to look at the over market now than at individual alts given the current situation. We are now at 22K roughly for Bitcoin. We are not that far away from the 20K top that we saw at the end of 2017. Crypto is pretty much in a free fall. So when we zoom in a little bit on the 1 hour, this is what we are looking at. And so the hourly RSI signals, they are pretty much going bonkers right now. We had 40 signals in the last 24 hours or so. And it's not just crypto that's creating all these alerts. It's also traditional finance, right? The S&P 500 on new lows. Here the overlay is from the global financial crisis, but as said in the public video, I think the Nasdaq, the technology stocks, is a better gauge of what could, in the worst case, happen here. Now, in case you're not yet in the Telegram chats, right? In case you're signed up for premium and you're only watching those videos without actually following the chats on Telegram, then I think you're really missing out here because there are a lot of very interesting discussions. And I want to address some of the arguments, some of the discussions in the chat that happened in the last 24 hours. So first of all, is it likely that we are going to see a quick recovery, as in like a V-shaped recovery similar to what we have seen during the Corona crash? And I think it really depends. It depends how the market overall will react now. Are we going to see very heightened trading volume? Because if we do, this is usually a positive sign, right? When we had, let's maybe switch to the 3-day interval. When we've got very high trading volume, a lot of coins are moving from panic sellers to people with longer time horizons, right? When you buy during a drop like this, usually you've got a longer time horizon. You're okay to endure some kind of volatility. You've got a different reference price. So the asset moves from weak hands to potentially stronger hands. That's what high trading volume means. So that very often means during a crash that we can see a quick reversal. So far, the trading volume is somewhat high, but it's not at Corona levels yet. If we go to the 1 week, this is the comparison, right? The Corona crash, where we had 1.2 million or so traded. Currently, that's lower. It's the same picture here for Ethereum. So I don't see a very quick V-shaped recovery right now at those 22K. But in case we do fall further, right, in case it really goes crazy now, then the trading volume might be so high that we could see a V-shaped recovery. So it really depends now on the pace of all of this. Is this going to continue? Currently, at this point in time, I don't think the shakeout is yet strong enough. It's not yet significant enough. This, by the way, is Bitcoin over the very long term. So if you want to look at that price, you have to search for BLX, not BTC. And the lines we see over here are just imaginary lines, like curved lines where connected the bottoms and tops to a certain degree. This is not a regression line. We also can see the curvature of those two lines is somewhat different, but I still thought it's an interesting exercise. Here we would see the bottom rather at like 15, 16K. So people that say that Bitcoin could move to like 5K or something, I think that's very unlikely. I don't think that would happen. There would be more buyers unless we see something very catastrophic happening, such as Tether unpegging, right? If Tether would get completely destroyed, or if Binance would get banned, or if Binance would go bankrupt and can't return funds or something like this, during such a crazy event, I could see Bitcoin going to 5K. But unless the overall system stays somewhat intact, I think the bottoms at around 20 or 15Ks, they are relatively strong. Let's look at the moving average, right? At the simple moving average, at the weekly moving average, very often people look at the 200 week. This is a pretty common indicator because in the past we have somewhat bottomed around this. In the Corona crash, we went slightly below this, right? Slightly is maybe an understatement. We went below this by 30%. We could actually increase this a bit more. I like to look at the 208 week moving average as in 4 year. It's not a big difference though, but this is what we get. The moving average here is currently at 21.7K. Now look at this, we're now at 21.8K. BLX only updates once a day. So let's look at this in the update form. This is what we see, right? So we do see indicators, we do see models that historically work pretty well that are now ringing the alarm bells, as in now is the time to buy. Will this go up in a V-shaped way? During Corona? Probably only if we go below to a similar extent as we have during Corona. If we consolidate here somewhat, probably the recovery will be rather U-shaped. Bitcoin is definitely not expensive right now, and if your time horizon is long enough, if it's at least 2 years, I don't think that the probabilities work against you buying right now. So I was playing this already on the weekend, so I'm kind of glad that we actually went down further. I'm going to DCA in, so today I will go to my OTC dealer and add more Bitcoin to my portfolio. And that's independent of whether we are going through a U-shaped recovery or through a V-shaped one. If we do go 30% below this, right? Similar to the Corona crash, which would put us, let's look at this, to around 15K, then I'm definitely also going to add even more, right? Then I would go really, really heavy on a purchase. You don't want to miss those kinds of buying opportunities, right? That would then be a drop from the top for Bitcoin of 78%. I do not think that we would fall way, way lower than that. The risk to reward at 15K would be phenomenal. But I think it's already not that bad. Short term, of course, as usual, we have to look at our best moving averages, right? We have to acknowledge that we are below the most important moving averages and that it's rather going further down than going up. But that's always the case, right? You never pick the perfect bottoms by following this strategy. You're just trying to optimize risk versus return on the medium term. Over the very long term, I think risk to reward is already not bad. Now, what about the altcoins? I've got a thing to say about the altcoins here. So this is total 3 relative to Bitcoin, and this is going up, which is funny because altcoins should be more risky than Bitcoin. So why are they going up when Bitcoin is now at 21.7K? My answer to this is retail is simply too slow. I think the altcoins are going to bleed more. I think they are going to crash heavily because we have seen the exact same thing during this incredible implosion of 2018. In case you're not aware of this, in case you haven't been around at that time, let's exactly look at this, right? So this was the introduction of this incredible bear market, and a lot of people actually thought we had bottomed out here during the 6K. So this final crash here was a surprise for basically everybody. So I was already dollar cost averaging way earlier than this, and I totally took this whole crash, but I continued to DCA in. So in the end, it was fine. But a lot of people were surprised by the crash, but that's not the point here. The point I want to make is look at when the crash for Bitcoin started. The highest point was on the 16th of December of 2017. Now let's look at total 3, right? So 16th of December for Bitcoin. Total 3, where was the top? It was on the 7th of January 2018. So a delay of 3 weeks. Retail had been late by 3 weeks to sell off. So they were really in denial. The reaction time of the not so smart money wasn't that great. Now I expect, since the markets mature, that we are unlikely going to have 3 weeks until this will be realized by retail. I think retail this time might be a bit quicker because some people might notice this. So I am relatively sure. I mean, you can never say 100%, right? You never know what's exactly going to happen. But when you look at total 3 relative to Bitcoin, I would not be surprised at all if we are going to see this. Total 3 relative to Bitcoin will go down. The altcoins will also lose. Of course, they're already losing, but in relative terms, right, they should actually lose even more than Bitcoin. Currently, they're even gaining against Bitcoin, which makes 0 sense. This is simply just slow reaction time by retail, in my opinion. This is probably what's going on. So if you still have a heavy altcoin bag, even though everything is cheap right now, right? Everything is already lost. I think the altcoins get hammered even more relative to Bitcoin. So if you are now heavy in alts, but you don't want to take those losses because the losses are heavy, you still want to be invested in crypto, I would rather now swap this into Bitcoin and see Bitcoin outperform the alts. You would still have your crypto exposure. You still would see a potential recovery that might come soon, right? But at least you're not in this high risk stuff where people haven't even yet offloaded to the degree they should be according to inherent leverage. Now, what about the whole inflation hedge idea? Now, this is the problem here, right? So Bitcoin has really increased in correlation. I have shown this several times. So when we look at the Bitcoin correlation to the S&P 500, it's relatively high. When we look at the Bitcoin correlation to gold, it's relatively low. When we look at the S&P 500 correlation to gold, it's even negative, right? So gold to S&P 500 has a negative correlation. This is why people see gold as a hedge to the rest of the market, because there's no positive correlation. But Bitcoin definitely does have this positive correlation. So the initial idea of going completely outside of risk, completely out of traditional finance, and have Bitcoin as a very nice diversifier, it only works to a certain degree. And unfortunately, it's even worsens over time with the institutional adoption, with people doing risk on, risk off bets and see Bitcoin as risk on. Over the long term, right, the 2-year rolling correlation coefficient, it's only at 0.3. And if we take a shorter duration, we've got more volatility, then it's at 0.37. So the correlation isn't huge, but it's definitely positive. It's definitely existing, meaning Bitcoin is not really a risk off. It's not really an inflation hedge. It will increase over time versus fiat because of the fiat expansion, but so is gold, right? And gold has the additional benefit of being relatively risk off. I don't advocate to buy gold. That's another story. Let's actually look at that. So when we have the very, very long-term gold to S&P 500 cycle. So we're now looking at a chart that's more than 100 years old, right? When we look at that, we see gold is underperforming stocks, but it also goes in these very, very long-term cycles. Now, what one might do, and that's, I think, a potential approach, is to use a moving average here. And you could make this more sophisticated. You could try to explain every single move here with macroeconomic data. But this is how I do this as a heuristic. You could go with a moving average that somewhat worked in the past. So the 100-month moving average seems to somewhat get these macro cycles right. And currently, it still looks like the S&P 500 outperforms gold, right? So gold is underperforming here, the S&P 500, gold divided by the S&P 500. So it does not look like a gold era to me just yet. So I'm not allocating to gold. But in case we do see the switch here, I might actually start adding some gold again. So that's just on the very macro scale. Is Bitcoin an inflation hedge? Is Bitcoin an uncorrelated risk-off asset? It's definitely not being traded like this right now, rather the opposite, and time is here not on our side. Gold, however, is, but gold is still not yet attractive. It doesn't seem to be in a long-term upwards trend versus stocks. So that's how I currently navigate this. If you're buying right now, don't expect a direct turnaround. Only expect that direct turnaround in case we now suddenly fall to 16 or 15K. If that happens, then I will go really, really hard on my investment in Bitcoin. I will buy very, very heavy. If we just hover around those 22K, I rather think we might just slowly bottom out over here potentially bleed a bit more. But then it's rather a U-shape than a V-shape recovery. I do think at some point in time we will see a recovery here. Being long-term in fiat is definitely not an option. You can even see that more people are now looking at the macro pictures. So the look into Bitcoin website takes a bit longer to load. This is the rainbow chart. And here the lower price as well is at 15K. And historically, this modeled the bottom very, very well, also including the Corona crash here. So 15K, I think, is the point where we can go really, really heavy. Of course, we can't put all our money in Bitcoin, but I would be relatively heavy. The only risk that we still have that overhangs all of this is, of course, traditional finance, where we have not yet seen something like the global financial crisis. If your thesis is that the monetary tightening will get so strong that we see something like the global financial crisis, then all of this modeling here with the regression goes out of the window. But I personally think if we really go down that low, right, once we hit these 10,000 levels or so on the NASDAQ, I think the Fed might get too spooked, as in employment might also take a hit, and maybe employment becomes actually more important of a thing than the inflation rate, right? It's always several things that the central banks have to balance. It's not just fighting inflation, it's also getting employment right. And if asset prices go down too much, then a lot of companies have to downsize. We already see this within technology. We see a hiring freeze of Facebook. We see a hiring freeze of many other tech companies. If things go as low as during the global financial crisis, then I think the tightening speak will also turn around. But it's not yet the case, right? But that's why I have my doubts that we will actually relive the exact same thing as we have done in 28. But of course, the question is, what is the Fed really looking at? Are they looking at technology, or are they really rather focusing on traditional stocks, as in the overall economy, the S&P 500? Then we might have a bit more buffer actually still to fall. Most jobs actually, now that I think about this, they aren't really generated in tech. Tech is a relatively job light industry. Most employment comes from S&P 500 companies X technology. And in that measure, we haven't yet fallen that much. So let's see how much room the Federal Reserve is giving themselves. We still have a bit of room for all of these models in Bitcoin to fall further, right? So I think the bet of this Bitcoin rainbow chart to stay intact, and also the other models, right? The Puel multiple, the market value, realized value, Z-score, the 1-year hodl wave, the realized hodl ratio. All of those models, they point to similar kind of bottoms. And because they do point to similar kind of bottoms, I do think there will be quite a bit of buying pressure on the side of crypto that might even be somewhat uncorrelated, at least at the beginning, to traditional finance. I am relatively bullish that these models will prevail. And so that's how I navigate the macro cycles. And since I don't believe I can time the bottoms perfectly, nobody can. We can't wait until we hit 15K, right? We have to continue to buy, and we have to set ourselves up in a way to be able to buy more and more the lower it goes. And then at some point in time, of course, we will be surprised when it falls too much, right? When it suddenly falls from 15K to 5K, we are pretty much screwed, right? But that's kind of like the range that I would play with, right? How much can you buy every month? Can you increase the buying amount up to 15K? And when it falls further than 15K, then simply just try to keep that amount up over the months and continue to DCA in. It's always a game of risk versus reward. And there are, of course, the risks of catastrophic events like a tether collapse, but you are always taking some risk to get some reward. And the risk versus reward at 15K is probably very, very good, right? You probably will then see at least a 5x, maybe even more over the next years when buying at those levels. But already the current levels, they are not elevated at all, right? The 200-week or 208-week moving average is now being hit, and this was historically a very, very good bottom. So I think simply just because of this model, right? We've got other models that see lower bottoms, but just simply because of this model, we should already allocate some capital to Bitcoin, right? We should not let this opportunity go completely to waste. That's the way I see it. But as said, this is a multi-week, multi-month bet. This is not a few hours, few days bet on the few days. It of course looks very, very scary to buy right now when we see nothing but red and people continue to get liquidated, right? This is simply a deleveraging event. People have to exit the market because their positions get liquidated. Okay, hope this was a useful update. Let's continue discussing this in the chat. I think this is the exact time where we should be active, where other people are just silent and doing nothing. This is where we should really consider how to react to this. Any kind of input is always helpful. I try to also address these then in the next video. Thanks for watching and see you in the chat. Bye bye.